It's about that time of day again here, boys and girls. Welcome back, welcome back. My name is Joseph James with your nightly newsletter. Is it already Tuesday, September? Is that really September? I feel like I've been talking about Labor Day weekend since the first day of July. Boy, congratulations, boys and girls. We made it. I've got all 12 fingers and toes. I got all my eyeballs here still intact. We survived another summer. Give yourself a pat on the back here, boys and girls. It was an incredible summer. I mean, literally, we had a ton of stuff coming out here this summer. We had a great time in our trade room over the summer. Hope you guys did as well. Oh, another summer melts away. The kids go back to school, and we get to play with all the great price action this fall. Guys and gals, buckle your seatbelt. We got a special newsletter here for you guys, kicking off the fall season of trading. Boy, I can't wait. I can't wait. Another exciting session here comes to a close today. It is a Tuesday evening. No, Monday was a holiday. So here we are, Tuesday, September 2nd, talking about what happened today. We got 3 important things to cover today in tonight's newsletter. And yes, it feels incredible to be back. Great to see you guys here too. Hope you had a great Labor Day holiday weekend. Hope we're able to get all the sand out of all those crevasses that we didn't even know we had, right? I know. Time to trade in the flip-flops for a pair of boots and, right, maybe a snowboard or two here and there. All right, 3 things on the schedule for tonight. First, we'll take a look at what happened today. Second, we'll take a look at what's on the schedule for tomorrow. And third, I'm going to save the best for last. We're going to roll up those sleeves and give you guys strategies, whether the price goes up, down, or sideways. You, my friends, by the end of this newsletter are going to be aware of exactly what happened today, exactly what to expect for tomorrow, and you're not going to have to worry because no matter what happens, you are going to be prepared. Boy, that's a pretty hefty bill there to deliver. Let's get started. Before we jump into it this evening, I do want to remind you guys, head on over here to sidewaysmarkets.com. If you're not watching this video right now on our blog, make sure you get over here to our blog at sidewaysmarkets.com. If you're watching this video over on our YouTube page, there's a link right below the video in the description of the video on our YouTube page. And I need you to get over here to Sideways Markets for 3 specific reasons. The first reason is you can download a copy of all of my charts today. I've also got a special batch of bonus charts for you guys. You can double click on that link below the video and download a copy of today's charts. That way you are ready for tomorrow. Also, second thing here, upper left-hand corner, you might be wondering how we profit from these levels every day. No, I promise these are not just random lines on a chart, right? Well, they could be, right, but they're not. And of course, I want to invite you to attend our live trade room as a guest. I'd like to show you how we use these materials live in real time every afternoon this week and next. Give me your name and your email address. I'll give you guys a free pass to attend our live trade room. Click that link right in the upper left-hand corner. And then last but not least, if you want to make sure you never miss another newsletter, I will send you an email with a copy of the newsletter every evening before 8 p.m. Eastern Time when it's published. All I need is your name and your email address in the lower left-hand corner. All right, 3 things here today. Download the charts below the video. That way you are ready for tomorrow's trade room. 2, take me up on this offer if you're not a member of School of Trade. If you'd like to see what all the commotion's all about, come in. We got a free pass for you guys to attend our trade room in the afternoon. And of course, make sure you guys register for our nightly newsletter mailing list. That way you get a special email from me every evening when the newsletter is published. All right, guys. What happened today? Let's jump in. Well, again, kicking off a brand new season. Welcome to the fall. The month of September is officially here. Sayonara to the month of August and the whole summertime slowdown. Boy, I was talking to my students last week in the trade room saying, I'll bet you guys can't wait until you don't have to hear about this month of August anymore, right? There's only 2 types of people that like to see the month of September. Day traders and people who live in the desert. If you live in the desert and you're a day trader, boy, are you excited to see that 9 month of the year. All right, so here we are. The fall season is by far my favorite time of the year. No, it's not just those synthetic spiced lattes from Starbucks, right? They're not really coffee, guys. Support your local coffee shop. Don't go to Starbucks, guys. It's all junk. It's not really coffee. I'm kidding around with you guys. My favorite time of the year, we got earnings season a month away. We've got the end of the third quarter coming down the pipe. We've got traders doing crazy things this time of the year. Boy, if this doesn't get you excited, guys, we got to check your pulse. Now, speaking of exciting, here's what happened today, right? Another session filled with opportunities. Traders got back to their desks after a long holiday weekend in the U.S. Early morning this morning was quite slow, but it did pick up the pace after 10:30 a.m. Eastern time, and we had actually expected that this morning because you know what happens, right? You haven't been in the office for a few days, you get back to your desk, the computer won't start, the charts aren't loading, right? My good friend Murphy, right? All that could go wrong does go wrong. Usually happens that first few hours, right, when you get back to your desk. So we took the time this morning to prepare for the week ahead. We prepped all of our charts like we do every Monday. Well, today was a Tuesday, right? That feels like a Monday. If you're in my trade room this morning, we focused the first hour or two just getting ready for the week because we knew it was going to be a little bit sleepy and sloppy while traders got back to their desks and tried to digest, right, all the junk food they had eaten over the weekend or digest all the news that happened overnight. We woke up this morning here in the U.S. to tremendous ranges. Gold had moved almost $2 by the time we had even woke up this morning in the U.S. Crude was down 100 ticks before even 8 a.m. this morning. E-minis are pushing higher. It was a very active overnight session. Early morning in the U.S. was slow today, but that didn't last very long. Another big round of bullish news in the U.S. this morning. Manufacturing this morning took center stage in the U.S., registering it was a 10-year high today in new orders on the market manufacturing index. 10-year high. So we continue to see very bullish news coming out of the U.S. Furthermore, we got fresh news this morning out of Saudi Arabia, right? They caught 88 people trying to plot attacks, and crude still goes lower. Wait. What? This is Saudi Arabia we're talking about. This morning we read fresh news reports of violence in the Middle East, and crude does... No. It can't be this crazy. Oh, it is. So apparently all this fear-mongering last week, which of course you've heard me talking about, and I've encouraged you guys to turn off the television set, voice your opinion, tell these morons behind the desk right at CNBC that you don't want to be just fed fear all day long, and look at these charts, right? The charts told you the story the past few weeks. Meanwhile, the news media wanted you to think differently. Today, gold tumbles $20 today. Gold lost 20 down to $12.65. Crude tumbles $3 today, down to 93. U.S. equities continue to stay strong as we kick off the holidays or the fall trading season, I should say. Right? And summer is officially in the rear view. Now, we got some really big news later on this week, all right? I'm not going to talk about this yet here, but we got some really big news later on this week, so stick around to the end of tonight's newsletter because we got Draghi, right? Yep, that's you, Draghi. I'm looking at you. He's got the spotlight on him on Thursday morning, and, of course, we got our non-farm payrolls on Friday morning. I'm going to talk more about the news schedule here a little bit later on in this program tonight, right? So stay tuned. So what a day. What a day. Boy, if this doesn't get your heart pumping, if this doesn't get you excited for tomorrow, well, guys, I don't know what to tell you. This is as good as it gets. A little bit of a slow start, but boy, did the session finish with a bang today. Now, here are the fundamentals that are really playing in right now, right? We've talked about this love triangle, right? Remember that movie Happy Feet with Lovelace, right? Oh, I love that. What a great movie. Anyways, the dollar, of course, pushing higher, euro pushing lower. What's that doing? Whenever we have the dollar gaining in value here in the U.S. or anybody else who has dollars in their pocket, what happens? We can buy more stuff. When stuff becomes easier to buy, we have more supply, right? There's less scarcity and prices fall. That's why gold's falling right now. That's why crude's falling right now. And of course, my buddy Draghi is really hurting right now because this euro is getting pounded. Get a big problem with deflation in Europe right now. So we have this love triangle right now going on between the dollar, the euro, and everything else right now. Okay, equities pushing higher because now our dollars can buy more. Crude oil pushing lower. A little bit less violence in the Middle East. Doesn't appear to be any less violence in the Middle East, right? But apparently we've gotten over that. We have this summertime driving season finished up here now in the U.S. That should be bad news for crude prices. So dollar gets some strength here. That will push the prices of commodities lower. It'll push equities higher, right, by simple laws of scarcity, supply, and demand. All right, so now we know what's happening there with the USD and the euro. We'll keep an eye on that here as we go forward. Moving forward here now, we take a look at the mighty mini Russell. Another bullish day on the Russell, but I've got some concerns here. We saw this Russell really start out the gate strong this morning, and then it kind of took a pit stop and went sideways. You can see we're just a few inches below the 1187.7. That's our next major overhead number on the Russell. Take a look, though, at this 32 anchor chart, and you can begin to see what happened this morning, right? Early in the session, we jumped up here this morning on the Russell. We then pulled back mid-morning, and we went back up to test the highs. And look, we're starting to form a bit of a sideways range here right now. Now, I'm going to show you more of that in just a moment on my 16 anchor. But what we can tell right now is that we've got to stay patient here. Let's go through the routine. What's my trend? Right? We do this every day in our trade room over and over again. What's my trend? Trend is bullish. Higher highs, higher lows. I'm above all the key moving averages. Trend is bullish. Now, second step, where's my setup? We did test the 1171 today, right? We did get to the 71. So normally we'd be green light, and we are green light right now to be a buyer. But here's the problem, though. As I go down to my faster time frame, we begin to see a little bit more of these clues, right? Now, again, go back here to my 32 anchor, and I want you to remember I've got some bonus charts here for you, and you can see I've got some targets marked up here for you. Got a couple channels on here, right? We get a couple extensions up top here, as you can see. So we've got some targets waiting for you guys to the upside right now. But hold on real quick. Back up the truck. I'm not sure if we're ready to be so bullish just yet. Here's the deal. Overnight, we saw this jump up, right? That puts in the high at 81.2. Now, you got to remember, everybody had been on break for a few days. We were unable to even trade, right? The markets were closed. There's a reason why the financial markets try to stay open as much as they possibly can. Did you know that? Did you know the exchanges actually want to be open all the time? They have to have times where they open and close to perform maintenance and, of course, because it's a regulated market, match up all the buyers for the sellers, right? So futures is fully regulated, stocks, equities, fully regulated, so there's a buyer for every seller. So there has to be some time when the markets are closed. Remember earlier on in the year when we had that huge superstorm, Sandy? Remember that? It seems like forever ago. But if you remember, that big snowstorm shut down the NYSE for a full day. That's a dangerous scenario when the market is kept closed like that. Why? Because it creates a sense of scarcity. In other words, it causes traders to think, if I don't participate now, I may not get a chance to. Right? Scarcity is a really big concern, especially if you're the regulators in the U.S. or you own an exchange or whatever the case may be. So the fact of the matter is that when we came back this morning, or should I say when the European traders came back this morning, they hadn't been trading for a while. They had no choice. The markets were closed. It was a holiday weekend, and the markets were closed, of course, on Monday. So this felt like we had a little bit of a snapback, right? It was almost like everybody came in and just blew everything out right out the gate, right? They were so excited to get back to business, they were buying right at the open. That's what it felt like. Now, we got confirmation of this after we pulled back, and of course, we watched this morning. We watched it pull back, and we began to look for buying opportunities. There were none. It was absolutely just straight line down and straight line back up. And then what happened was we kind of sat here for the rest of the morning. So this leads me to believe that this move higher today was a little bit of a, get out of my system type of buying environment, right? Everybody gets back from break, right? They're trying to get the salt water out of their ear, and they're buying left and right. Now, for good reason. There was a lot of reasons to be a buyer right now. Long term, I'm definitely bullish. Short term, I'm definitely bullish. But I'm concerned. We didn't get above the 81.2. Heck, we didn't even try. And that tells me that we're likely here to see this price continue inside this range. So what I want to talk about here is again, those 3 steps to success. What's my trend? My trend is bullish right now. I can see we're double green. I can see we're above all the key moving averages. But the market structure right now is telling me we're probably in store for a little bit of a pit stop before we see new higher highs. Where's my next setup? Now this, believe it or not, is what leads me through a very important process. Normally, or I shouldn't say normally, but if I didn't think where's the setup, I'd be prompted just to be a buyer right now. This reminds me though, where's my next buy setup? See, that's the deal I'm talking about, right? Members, you know what I'm talking about. If we don't have a setup, we have a very low percentage environment. Where's my next buying setup? I've got 2 of them down here. So that's where I'm looking to trade right now. See how simple that is? Now, if you're a brand new trader, this might be way over your head right now. But what this does is this allows me to have confidence to know exactly where and when I'm going to be looking for the next opportunity. What's the third thing, right? Didn't you say there was 3 steps to success? What's the third one? The third one is the entry trigger, right? Or the entry pattern. Where do you get that? You get that with me tomorrow morning in my live trade room. Or if you're a member of mine, I teach you all this. You don't even have to need to be in the trade room tomorrow morning, all right? You'll know how to look for it on your own. But I'll always be here tomorrow in my trade room to give you guys a hand. So what am I seeing right now in the Russell? Again, that big jump up here overnight gives me some reason to believe that we may end up going a bit sideways here because we never even tried to get a new high here. Again, a little bit of pent-up buying pressure thanks to the holiday weekend. We got some great news today out of the U.S., right? The euro continues to get pounded lower. But again, as you can see here, though, the chart doesn't lie. I'm not going to speculate right now, right? The truth is in the price. The price, the wisdom of crowds, right? That self-fulfilling prophecy, yada, yada, yada. We know what we're talking about here. I'm looking for a sideways range here. Because I have a bullish trend, I can say with confidence, I want to buy these lows and take my profit back at the high. Now, if we do end up going higher here, you'll notice I did define a short-term channel, and we are right near that channel. So if we get a new higher high here, do not be the sucker that buys the highs right now, okay? Do not buy these highs because you've got this trend line right overhead, and we never want to buy the highs, all right? People who buy the highs eventually end up losing all their profit. Sometimes you can get lucky every once in a while buying the highs, right? But look what would have happened here. If you would have bought that high, you would have been in certainly a large amount of pain. Buy the next high, again, a lot of pain again. Right? It's easy when it jumps up like a rocket ship, but that doesn't happen very often. So don't buy those highs. We will be waiting for pullbacks here as we go. So scenario 1, if we go sideways, we're buying lows, taking profit at highs. If we go lower, that's exactly what the doctor ordered. I'm going to be looking to buy those lows. Easy. If we go higher, that's the challenge. If we go higher, let some other poor sap buy those highs. If we go higher, I'm going to wait for price to pull back and then we'll start buying again. If we go higher, make sure you tune into my trade room tomorrow morning so I can give you some real-time updates. As you go overhead, guys, I've got 3 targets here overhead. I've got the top of this big channel. And again, download all the bonus charts and you can see what I'm talking about here. I've got my buyer's target, 91.4. And is that 96.8? Yeah, Yes, it is. Yep, 96.9. So those are my targets overhead. And again, I'm not sure how easy it's going to be to get to those tomorrow. But in case we need them, we've got them ready to go. Now that you know my plan on the Rusty, shall we? Let's indulge in some gold here, that funny yellow metal. Now, once again, we've been bearish on gold here for months. I've been bearish on gold here ever since the month of March. You've been listening to me yap my gums right about selling gold and the fact there was no real reason why gold kept going higher. The only reason why gold kept going higher was because of one little snafu out of China earlier on in the year and a whole bunch of fear-mongering by the news media, right? Turn off the television set, put down the newspaper, and turn on your charts. They don't lie. I was talking to a bunch of traders over the weekend, had a dinner party at the house here in Los Angeles, invited over some of our team, and we were talking about the fact that everybody in the world was all worried right now, except apparently the only people who count, the ones who put their money in the market. Right? The folks who care, the folks who really count are the ones that take their wallet out of their back pocket, take out their dollars or their euros or their rubles or their whatevers and put them to work in the market. Apparently, there's not so much bad stuff out there after all. And I know it sounds like a broken record. I've been talking about this for months. Problem, though, is, you know how it goes, right? Problem is, it doesn't matter what I think. All that matters is what the global consensus is, right? So we got to go with the crowd, right? The market is always right, even if it's wrong. Remember that, kids. 1265.8, we come all the way down to these lows. We are going to start seeing some support here at the low of this wedge. The next support level down bottom, 1238. Boy, wouldn't that be lovely to see that happen. We are going to start seeing some support, though, down around that 1254 area on the gold. As we go further, as we go deeper down this rabbit hole, you can see here, boy, oh boy, what's the date on this? What's the date on this one? What is that date? Yeah, that's June. So back in June, we had the 1242.2. This is all the way back in June. Kind of cool how this gold market has moved in the same way the quarters have, right? 3, 6, 9. Here we are now in the 9th month of the year. Are we going to end back up to that 1242.2? Tough to say right now. I can easily see we're trying to right now. We can see easily, though, this long-term channel. Right, get a nice long-term channel. This, by the way, this channel's been on this chart for months now, right? I mean, literally, this thing takes us all the way back here. Maybe not months, right? But it's been here for at least 45 days. So weeks, I guess, would be the best way to describe it. You can see we're bearish, right? What were those three things again I was talking about earlier? The 3 steps to success, something like that? Yep. 3 steps to success, right? It's the way that we make it easy for all of our new students to make profit with me, right? What's my trend? Trend is down. How do I know that? I got lower lows, lower highs. I got a red cloud, double red cloud. I'm below all the key moving averages. Easy, right? Trend's down. What does that tell me to do? It tells me to sell. Okay, I want to be a seller. Where do I sell at? I sell at a sell setup. Pretty interesting, right? Yeah, that's right. We don't just chase patterns. We don't just default, right, to being short. We look for a setup now. Where's my setup going to be? Where's the next setup going to be here? Well, I can see a few of them. I've got 73.4. I've got 80.4, 84.4, 93.7, and, oh boy, above that 1300, there's 1306, right? So there are 4 easy sell zones, which I can use for a setup. Once again, my trend is down. The next setup that I have in play right now is at 73.4 or at 1280.4. Where's the entry trigger? Yeah, exactly. Come out and see me tomorrow in our trade room, and I'll walk you guys through it in real time, right? I'll teach you everything I know about how to get into those trades here. It's very, very easy. Very, very easy. So these levels, we're going to use these tomorrow in our trade room to find those trading opportunities that are the highest of percentage. Now you'll notice here we did rest here at that 1265, and so the next target down bottom here is going to be that 54.4, and then of course you've got the 46.7, you've got the 42.2, and the 32.9. Those are going to be 1, 2, 3, 4 targets here to the downside on this funny yellow metal. Moving forward here, last but not least here on the gold. Gold has plenty of opportunities here to get short. The hardest part right now will be staying patient. What's my trend? Trend is down, right? This is clearly a bearish trend. How do I know that? Well, its simplest explanation would be the red clouds. That's the easiest way to describe it. A more technical view of it would be lower lows, lower highs, right? So that would be a bearish trend. Again, I keep it pretty simple in our trade room. It's the color of the cloud. Now, got my trend that's down. Where's my setup going to be? My setup, I'm glad you asked, right? We got 71.1. That's a new one, right? That's in addition to what we saw on the 32. And then we got that 73.4, 75.6. I got 80.4, 80.9. As you can see here, 1, 2, 3, 4, 5 different setup locations. And then where's the entry trigger? I'll take wave patterns. I'll take two-step patterns. I'll take wave reversals. We'll take some three-point reversals. Whatever the entry pattern is that occurs around these areas on my chart. If you need more help with those entry patterns, don't forget, come in and see me tomorrow morning in our live trade room. So once again, the big thing on gold right now is that strength to the US dollar, the lack of fear around the world right now, and those bullish news reports we keep getting out of the US right now. Those are the fundamentals affecting gold. Now I'll tell you, crude, you got to love crude, right? I mean, you got to love crude, right? Think about this. We've seen in the face of all of this violence in the Middle East, all this fear-mongering going on, and of course last week, that moron Putin, right, sticks his foot back in his mouth again, literally, what was it, 16, 18 hours after, no, diplomatic solutions, right, we welcome, yeah, blah, 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 blah. It's like, okay, so the next time we hear about peace between Russia and Ukraine, I'm going to think that's about as ridiculous as I thought about Russia invading Crimea back in March. What a joke. What a joke. I'm really, really starting to think that Putin actually owns CNBC. I think he might, right? Does the Kremlin own Bloomberg? I think they might be in cahoots just for ratings right now. Because that's the only reason why I can think of a reason why an intelligent human being would even give any more credit to a single word that comes out of any one of their mouths. I mean, am I wrong? If I'm wrong, I'm clearly missing something. Post me a comment because I would love to know why the hell we care about this anymore. I know, a little bit rash there, right? I would like to know why so much emphasis is being placed on this issue, because I don't see any real reason why, right? It's like, hey, look, what's it over there? More troops going into Ukraine. What more troops? No. It's a joke, an absolute joke. And meanwhile, it appears the rest of the world is quickly catching on. They've had our attention since March, for crying out loud, and now finally it appears, and today was great. Today was classic today. We talked about this last week. Remember last week we talked about the trend cycle, right? Last week we talked about the trend cycle. Today was so classic. I got to talk about this. So, of course, last week, right, down, or 2 weeks ago, right, we made all that money selling short on crude. We made enough money in just 2 weeks' time selling short on crude once we picked up on the shenanigans, right, that they kept feeding us in the news media. And, of course, what happened was we saw a week before Labor Day where we went sideways. And then what happened late last week, right? Late last week, breaking news, fresh troops in Ukraine, blah, 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 joke. And what happened? Price went higher and then pulled back. And here we are this morning, right? Here we are this morning, sitting here after a nice big rise. And, of course, we opened the trade room this morning. And my exact words, the first thing I said was, don't you even dare buy this thing right now. Because you know what we talked about last week, right? Last week, my exact words, verbatim, and this is not the first time I've said this, anyone can put together a rally. Anybody can put together a couple front-page news reports that scare the bejesus out of the average consumer. That's what happened. The market doesn't lie, guys, and it was great. Today was a great example where literally the wisdom of crowd said, this is a bunch of hogwash. This is a bunch of manure. And what happened? It just collapsed right back down into that range we came from. Almost as if to say, enough of this fear-mongering. We know what's going on. Now, this was a classic case of that attempt by those buyers, right? For whatever reason it was. I'm not gonna go into more detail about that, right? We know why. It was a bunch of fanning the fear flame, right, with the news media. Everybody worried about for no reason in this issue in the Middle East, right? I get it. Times are not different. Nothing new here. It's a joke. The big deal, though, is that we didn't go lower. That's the big deal right now on crude. We didn't go lower. And that was what we needed to see today, wasn't it, guys and gals? I said 3 things today, this morning. I said, don't you dare buy that crude. And second, if we make a lower low, get ready for the bloodbath. But we never made a lower low. So I said, if we stay inside this range, now we're right back to where we were only a week ago. So here we are now, back inside this sideways range on crude. We jump up, right? Oh, we're scared, we're scared, we're scared. No, we're not. Times are not different, right? Put down the barrel of crude oil, step away from the buy, right, and get back to reality. So we jump up, by the way, right into the zone we gave you guys last week to be a seller, right? Go back and take a look at it. It was last week's Wednesday's newsletter, right below 96 even. That's exactly what we talked about. Here's a different look at an anchor chart. Here's a 64 anchor. There's really no rhyme or reason to this time frame. I just took 32 and doubled it. Okay, very, very simple. Don't overthink this stuff, guys. There's no hidden meaning in 64. It's not a fib number. I don't think the Freemasons used it, right? Don't dig into this too deeply, all right? Not that big of a deal. Take the 32, double it to 64. Now, very interesting to see here. The reason why I did the 64 was I wanted to show you here January 9th, 2014, right? Right at the beginning of the year. Are we going to possibly be right back to where we came from here? Now remember, this whole thing in the beginning of the year this year, remember this? Remember this? This was when Mother Nature took the whooping stick to us. Remember that earlier this year? Right? There are some people in upstate New York that just saw their front lawn for the first time in a year and a half. No joke. Right? They've been doing bobsledding all month of August. That's how much snow they got at the beginning of the year. And so that is what I'm curious about right now, is that we had this move, and of course, Russia invades Crimea, right? That gets all the fear factor going. And now we're starting to pull back off it. You can see how the cycle is working its way through. So if we've now caught on to the fact that all these shenanigans in the Middle East is really just to get the newspapers sold, right? I'm still very, very suspicious. I really do believe that there are ulterior motives out there other than, right, just to get the price of crude oil higher. All right? It has to be. It's the only reason why. But whatever, right? I'll leave my conspiracy theorists. Mel Gibson and I can hang out somewhere else here this afternoon. But what I can see right now, though, is that, guys, if we don't see this thing go higher here, if they don't find a reason to grab some bids here, we could be seeing by the end of this year back to that 85, back to 84, right? That's what we're seeing right now. I've got some pit stops along the way, though. We went all the way down to 92.14 a day. I've got 90.58. I've got 89.84, 87.63. A big number here is going to be this January low of 85.84. And I got one more extension down here at 84.40. So 85.84, I've got your number, 85.84. That's where I'm expecting this price to be no later than January 9th, 2015. Now, how do we get there? How do we get down to 85.84? Well, first of all, we turn off the television set, like I said earlier. I'm going to be using these levels below me as significant targets here as we go lower. Now, I'd be a fool to think that we're going to go straight line down to it. I mean, it'd be nice, right? Wouldn't that be just a gift from the old trading gods? But, you know, the trading gods, they have their own sick sense of humor. They like to make us work for it. So don't be surprised if we end up with like a little bit of a snafu here, maybe go higher before we get lower, right? But that's where I'm looking at right now, 85, 84. Now, remember, I said earlier, I'm really, really concerned with the fact that, again, we saw the price jump higher. This is classic. It was so much fun watching this morning. This is why I love being a trader. Watching these guys push this thing higher only to have it literally collapse. And again, don't say I didn't warn you about this area, right? I gave you that 96.12 last week. It's been there for over 10 days. No surprise there. But here is the big surprise. I'm a little bit surprised that we didn't get price going really low, right? I was a little surprised here. When I saw it collapse here, I thought, all right, give me the money now. 92.15, here we come. Didn't even get close. So this tells me, just like on that Russell, remember how we said earlier, the Russell kind of felt like they had come out the gate and kind of spent all their bullets right in the first few hours of the day today on the Russell? Feels like that may have been the case here on crude. I'm not going to say I'm extremely confident to the downside. Well, let's back up. I'm not extremely bearish right now. Let's put it that way. Long term, I'm definitely bearish on crude. Short term, not so much, right? Not so much. And again, we stalled out right inside this area, right in the middle of this range. And I'm going to go out on a limb here and say that if we don't get lower lows here tomorrow morning early, we're probably going to spend the entire session on Wednesday inside that 94.45, 92.15. Now, we do have some important news tomorrow, and I hope I'm wrong. So let's plan this out, right? Because, again, the way it looks right now, it looks like crude is, again, just like that Russell. It felt like everybody came back to the office today and said, oh, why is this thing still above 95? See ya, and sold it right back down, right? That's what it felt like. Now, straight line like this, right, we don't see straight lines very often. Members, you know what I'm talking about. What do we always talk about with a straight line? Fire, right? It's somebody stands up in a movie theater and says fire. It's what? It's a panic market. It's an irrational market. It's a low volume, very low conviction move, all right? Usually when you see a straight line, okay, it'll happen on either very low volume, very high volume. Okay, so one or the other. This one happened on relatively low volume here today because it was, after all, the first day after a long weekend. Right? And again, it really came out the gate slow this morning and then just kind of collapsed. And of course, once it collapsed, all the rookies and retail sellers jumped on and had some fun with it. The most important thing right now, though, is that we didn't make that lower low. Let's get ready for tomorrow. If we open up and go sideways, what's my strategy here? Well, what's my trend? See how easy this is? Just think about it that way. What's my trend? Trend is down. So what do I want to do? I want to sell. Sell where? Sell at a setup, right? You're getting it. You're getting it. And you're not even a member yet, right? Imagine how powerful this is going to be for you when you actually know what I'm talking about because you're part of our community. Well, as you can tell here, I want to sell at a setup, right? At a setup. How about those setups? We got 94.34, 94.73, 95.29, 95.62, and by all means, this is crude we're talking about. There's no reason why it can't go back to 95.71. Remember, I said I'm long-term bearish, not short-term bearish. So right now, we may have to wait here tomorrow to get into a sell setup. Want to sell the highs, right? Sell at a premium. Sell at resistance. You're a fool for selling the lows. You're crazy for selling the middle. So of course, what if price goes higher, right? Price goes sideways, we're selling the highs, right? Price goes higher, what are we doing? Same thing, right? Waiting to sell at any of these zones overhead. What if price goes lower? That's going to be the challenge. If price goes lower tomorrow morning, this is the stuff that kills a new trader's account. I know I'm bearish. JJ said to sell. But remember, guys, talk to your spouse, talk to your next door neighbor, talk to your dog. Timing is everything. We know that, right? I don't want to just sell. Would you sell your home at the bottom of the market? No, you would wait to sell your home at the top of the market, right? Would you sell a new car at the bottom of the, no, right? You would sell at a high. You would sell at a premium. So with that said, as we go lower, what are my options here? I have a lower percentage reversal, right? I can buy those lows. It'll be lower percentage, which means take your profit quickly, right? Protect that capital, tighten up that stop, right? So if you do get down to that 92.50, 92.15 area, we can buy those lows. I will not be buying those lows. I'll be waiting for price to keep going lower. Here's the key though. As we go lower here, I do not want to be selling above that 92.15. That's the reality. So what I'm looking for price to go lower, but give me a chance to get short here below 92.15. See, the way this works is this, is that if I have a sideways range, this is a classic scenario of one right here. If I have a sideways range here right now and I go to a new lower low, what's going to happen is if I can get in short below that low, now we're talking, right? Now I'm selling at resistance. But here's where new traders go wrong. They get so excited about selling short that they get short, but it's above that low. And guess what happens? They're not selling into resistance anymore. Now you're selling into support. And that's where guys like me look forward to taking money from you. So don't make that mistake. Okay, wait for price to go lower. That's why I said earlier, this is where you're going to have the most difficult challenge. Getting below that low, staying patient, and then waiting patiently to see where that entry is going to be so you're not selling short right back below that range. So tomorrow morning, when you come out and see me tomorrow in the trade room, remember to pay close attention to that 92.15. As you go lower, you will have a chance here to be a buyer, right? But again, like I said earlier, that's going to be a lower percentage trade. So make sure if you do that, take that profit quickly, tighten up that stop to protect against a collapse. If it collapses back down, you know there's going to be a ton of stops being run. You know it's going to get ugly down there, but stay patient and wait for the proper setup. And I'll give you the proper setup tomorrow morning in our trade room live in real time. Alrighty? Looking good. Last but not least, right, that panic, that big drop, right, that low volume, fire, right, price tumbles. Again, not a lot we can do here out of a straight line, right? A straight line does not give me very much to work with. So really, I've got 3 spots here. I kept this old trend line on here because I think that might end up being a very important thing tomorrow. So looking for a short here. I'm going to use that trend line. I'm going to use that sell zone, right? You got a lot of things here. We've got, obviously, again, that trend line. I have a funny feeling that trend line is going to be the big ticket tomorrow morning. We'll see what happens, but if I had to guess right now, that trend line is too convenient here for us. 94.51, right? Trend line, of course, 94.34, 94.73, and 95.29. Those are my levels here to look for a short here on crude. It's fun to watch, but a big straight line down like that makes it difficult for us the following session because now that panic selling, we now have to let the moving averages catch up. We got to let all the technicals catch up now so we can get the wisdom of crowds and get those masses back in to sell it again. All right, so very challenging here right now on the old emotions here if you're a crude trader this evening. So be careful tomorrow on crude. Again, gold bearish, crude bearish, Russell a little bit sideways here, crude a little bit sideways for tomorrow. And come back and see me tomorrow morning if you want real-time updates on what you're seeing right now. Finally, last but not least here, boy, long newsletter here for you guys tonight. I told you had a lot to talk about. We have a whole plethora of news on this calendar for you guys tomorrow. Starting here tonight, we've got news out of Australia. I've got Japan, and we have Chinese news here. 9:30, 9:35, and 9:45 p.m. Eastern Time. If you're in Asia, if you're in London, be ready for the excitement. Now, moving on to tomorrow morning, we've got the Bank of Japan announcement tomorrow morning. It'll probably be right around 2 a.m., 3 a.m. tomorrow morning. Then we go right into big news coming out of Europe. We've got news from France, Germany 5 minutes later, and I've got the ECB, right, the EU, up at 4 a.m. We go to Great Britain at 4:30, and then 5 a.m. retail sales. Guys, this is a ton of news tomorrow morning, right? Be ready, be ready, be ready, be ready. A lot of important information coming out tomorrow morning, and I want you guys to be prepared for it, so be aware. We go into the U.S. We got 8:15 ADP employment report. That's going to be a leading report ahead of Friday's Non-farm payrolls. We'll talk about that in a moment. I've got news out of the CAD here at 10 o'clock. Factory orders tomorrow at 10 o'clock. Beige book tomorrow afternoon at 2 o'clock. Deep breath. And then retail sales at 9:30 p.m. How much more can we jam into one session? It's all crammed into Wednesday's session. Starting tonight at 9:45 or 9:30, I should say. Going into tomorrow morning in Europe. Again, you're going to be hearing from the Bank of Japan around 2 a.m. tomorrow morning. Then you've got 3:50, 3:55, 4 o'clock, 4:30, 5 o'clock retail sales. Whew, it's a ton of news. They're all Red Star News reports tomorrow morning, so be ready. Then again, don't be fooled by the ADP employment report tomorrow morning at 8:15. That is not the non-farm payroll report. That is not as important as you think it might be. It is going to give us a good heads up, though, of what to expect on Friday. So it will have a self-fulfilling prophecy in that sense. Then we got 10 o'clock, factory orders. Big, 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 monstrous news report tomorrow in the form of factory orders. It's not a Red Star News report, but manufacturing is on everyone's minds right now here in the U.S. And then, of course, we wrap up tomorrow's session with Beige Book at 2 o'clock. That means it'll be an early finish to the morning. Get to lunch early, come back early, and be ready for Beige Book. And then tomorrow night we'll talk about the retail sales in Australia. A quick heads up before I let you guys go. I'm looking at you, Draghi. I see you, Draghi. I see you Thursday morning, 7:45 a.m. His feet go to the fire. As you remember, he was squirming in Jackson Hole last week. He had his boots off and everything in Jackson Hole, Wyoming last week. He had his feet to the fire last week, and it's happening again right now. I would not want to be Draghi right now. I'll tell you that much. Got a big, big problem on his hands here with deflation in the ECB. Right, Thursday morning, 7:45. You should be hearing tomorrow quite a bit of commentary as people speculate ahead of my gal Draghi. That was a bad joke. And then, of course, you got Friday. I heard the first Friday of every 1 month is pretty important. That's right. Friday morning is non-farm payroll Friday. That's right. We're not wasting any time, right, to kick this fall trading season off with a bang. So tons of news tomorrow. I've got Draghi on Thursday morning at the ECB, and everyone's eyes and ears, though, are going to be first on Draghi on Thursday. I can't wait to hear what he says on Thursday. And then, of course, we got non-farm payrolls on Friday morning. Boy, what a jam-packed newsletter here today, guys. I want to thank you so much for being a part of the newsletter this evening. Don't forget, post your comments below the video. I'd love to know what you love, what you hate. And one last thing before you guys go, don't forget to join our free trial. Head on over here to SchoolOfTrade.com. Click on that big button that's really tough to miss, right? It says free trial. Give me your name and your email address. Check your email. I'm going to send you a verification email. And don't forget, guys, we got 3 levels of membership, and I've got someone standing by here whose English is their first language to give you guys some advice or give you guys help if you need them there. All right, guys, have a fantastic afternoon. My name is Joseph James, broadcasting live from a beautiful evening here in Los Angeles, California. The best time of the year, I might add, to be in LA, the month of September, October, November. Hope you guys had a great holiday weekend. Kick those kids back to the bus stop, and let's make some money, honey, because it's back to the fall season, and you should be excited. I'll see you guys tomorrow morning in the trade room, 8 a.m. Eastern Time. Have yourselves a great evening. Adios, amigos. Bye-bye for now.